In this video, I'm going to be ranking the most popular small business loans using a tier list where S and A are the highest. These are the loans that are good and worth going out of your way to apply for versus everything else, which may cost you more interest rates than the other options I present. So like and subscribe to the channel. It really means a lot, and it's 100% free. So let's get into this. The first program I'm going to cover is your working capital and short-term loans. Buy out your MCAs. The pros of this product, it's fast. It's easy to access even when a bank says no, even when you have low credit, bad history with other lenders, or short time in business. When I say short time in business, I mean less than a year. And it's a clean lump sum that can be deposited within, let's say, 24 hours time. The cons to this program is the fact that it's expensive compared to a bank or SBA loan, and short term means frequent heavy payments. And the true cost is often varies in the fees instead of a clear APR and how fast you pay it back, which strangles your cash flow. Obviously, it's not the right tool for every situation, but it is for short-term gaps where you have clear opportunities and clear defined returns that you can measure the cost for until you can refinance into something cheaper, or until you can pay off using the ROI from your investment using the short-term high-rate product. And for this reasoning, I'm going to give this specifically a rating of C. The next product I'm going to touch on is your credit cards. Your 0% interest introductory credit cards that you get from your banks, your Wells Fargo, your Chase, your Bank of America. Now, almost anyone can get one. Funding is instant and used right. They build your business credit while floating short-term interest costs interest-free during the grace period, usually for the first 12 months. Now, you can qualify for this as long as you have 700 plus credit, and you can get this even as a startup. The downside to this is the fact that after the first 12 months, or whatever that grace period is, it varies based on the bank. Rates run up to 18 to 29% afterwards. If you carry a balance, there's a personal guarantee on the line, even as a startup, and all the products on the list will have a personal guarantee. But I'm pointing this out specifically because this is the only program that startups can get. You have to account for the fact that you'll be liable for this after the introductory grace period. So you need to be able to make the payments. Now, it's a great tool for short-term spend if you can pay off every month, but slow trap the moment you start carrying balances. It's a tool, not evergreen funding strategy. And for that reasoning, I'm going to give this a ranking of C. The next product I'm going to touch on is a business line of credit. There are many variations of this. You get it from your bank, private lenders. Usually it's revolving, so you only draw on what you need and you only pay interest on that. The rates are reasonable for most banks, roughly 7 to 8% for 700 plus borrowers with 2 years plus time in business and profit taxes to show for those previous 2 years. And once it's open, the cash is there whenever a gap hits. Now, the downside to this is while a normal bank is 7 to 8% in APR, if you were to go to a private institution or a private group, their rates for unsecured financing, unsecured lines of credit can run anywhere from 20 to 30%. And so the easy access can tempt you to lean on it for things you should fund other ways. Now, it's one of the best all-around tools any business owners can have for managing cash flow. It's flexible and it's fairly cheap if you get it with your bank. Less so if you use a private group. And so it only loses real points for taking real qualifications that most people won't fit into. And for that reasoning, I'm going to give this a ranking of B. The next product I'm going to touch on is the SBA 7A. The pros of this product is it's cheap. It's broadly available for most people as long as you fall inside the criteria. With strong borrowers with profitable history, landing rates ranging around 9 to 9.25%, term stretching up to 10 years. And you can use it for almost anything: working capital, refinancing, even buying other businesses. The cons of this, it's slow, with closing running 45 to 75 days. The paperwork is heavy, and you'll need solid credit, real revenue, and usually some collateral to get approved. You can use this revenue from businesses you're trying to buy, but either way, the underlying business that borrows using this product needs real revenue. Now, if you can survive the wait and the paperwork, nothing really beats it on cost and flexibility for an established business. It's a loan that every other product on this list is secretly trying to be, with the exception of the DSCR product. And for that reasoning, I'm going to give this a ranking of A. The next product I'm going to touch on is the SBA 504. Amongst the lowest fixed rate you can get for a real estate tied to your business. It's going to be roughly 6.5 to 7.5% locked up for up to 25 years, with some lenders giving you floating rates. And if you were to use this program to buy a building, you usually only need 10% down. And if the building comes with equipment, it can be wrapped into this program as well. The cons of this, real estate and big assets only, so most owners can't use it. Closing drags 60 to 120 days, and the two loan structure with a CDC makes it more complex than a straight product, a straight credit deal. So for most owners buying the property they operate from, this is about the best deals in lending, cheap and locked for decades if it's not adjustable. It ranks just under an S because very few people can use it. The next product I'm going to touch on is your equipment financing. The equipment itself is the collateral, so approval is easier and rate stays fair at 8 to 20%. Strong credit lands 6 to 9%, and you get the gear you need without draining your cash reserves. You can only use it to buy equipment. Weaker credit gets pushed toward pricier lenders, and if the gear ages out before the loan does, you're paying for something already losing value. Now, for any trade that runs a machine, trucks, or tools, this is a smart, self-securing way to grow without tying up cash. It ranks solid, but not top tier because it only solves one specific problem, which is the equipment. And for this reasoning, I'm gonna give it a B. The next product I'm gonna touch on is your business HELOC. This is some of the cheapest capital you can get, around 8%, because your home secures it. It's revolving, so you draw only on what you need, and you can put the money toward anything in the business. It's also relatively quick, usually between 7 to 14 business days. And the only downside is your house on the line, so a rough stretch in the business can put your home at risk. You need real equity built on top of it, and approval leans on your personal income, not just the business. If you own your home and have equity sitting idle, this is some of the smartest, cheapest money available to fund a business. It ranks high, but not at the very top because the risk is personal, not just financial. So that's why I'm gonna give it a ranking of 8. The next product I'm gonna touch on is the DSCR loan. It qualifies on the property's cash flow, whatever investment property you have, whether it's a commercial real estate or investment residential real estate, so no tax returns are needed. It comes with long fixed terms and rates and lets you pull cash out of equity that's sitting idle otherwise. The downside is the fact that you need a commercial property, so most business owners can't qualify for this because they don't own the property they operate from, or they don't own any investment properties, and you need real equity remaining to make this work. And so for this reasoning, I'm gonna give it a ranking of S because of how flexible it is and the fact that you can use it for anything toward inside the business. All right, so we just ranked the 8 most popular small business loans by tier. Now, obviously, you should not go back and apply for all 9. You just have to pick the 1 or 2 that fits your business and will allow you to have the lowest interest, so you keep more cash in your pocket and put it back into the growing business. If you want help figuring out which one is right for you, this is exactly what we do at Loan Credit every day. We look at your full picture and breaks down exactly what you qualify for, what the rates look like, and what your cheapest path to capital actually is. So if you'd like that for your business, I'll leave a link in the description where you can fill out a quick form completely free to learn more. So that was every popular small business loan 2026 rank. If you want to see exactly how to use that debt to grow your business, go watch this video right here.